As of 12:18 p.m. Eastern Time on October 1, 2025, BigBear.ai, trading under the ticker BBAI, is priced at $6.96, marking a significant intraday surge of over 6.9%. This upward momentum is capturing the attention of many traders, especially those using platforms like Robinhood and SoFi for their online investing. The immediate story is one of aggressive buying, a stark contrast to the stock's recent volatility. But the real story here isn't just this impressive single-day gain. It's the deep-seated tension between the company's ambitious vision and the harsh realities of its financial performance. While the market is buzzing with excitement over BigBear.ai's potential in the artificial intelligence sector, a closer look at its fundamentals reveals a narrative that's far more complex and, frankly, more precarious than the current stock price might suggest. There's a significant disconnect between the popular perception of BigBear.ai as a high-flying AI powerhouse and the underlying metrics that should be guiding investment decisions. This is a classic case of expectation versus reality, and today we're going to dissect that gap. The prevailing belief among many retail investors, fueled by a year of explosive growth in the AI sector, is that BigBear.ai is on the cusp of becoming a major player, a smaller, more agile version of giants like Palantir. The company's focus on providing AI-powered decision intelligence to the U.S. government and other federal agencies seems perfectly positioned to capitalize on the increasing demand for advanced data analysis and national security solutions. The implementation of their biometric identity system at Nashville International Airport has only added to this bullish narrative, painting a picture of a company with cutting-edge technology rapidly gaining real-world traction. This expectation is what has driven the stock up over 300% in the last year, a meteoric rise that has many investors feeling confident, perhaps even overly so. They see the headlines, the government contracts, and the AI label, and they see a clear path to substantial returns. Many are actively managing their portfolios on platforms like Interactive Brokers and Fidelity, allocating significant portions to what they believe is the next big thing in AI. However, the reality of BigBear.ai's situation presents a far more sober picture. While the stock has been on a tear, the company's financial performance has been, to put it mildly, underwhelming. In the second quarter of 2025, BigBear.ai reported an 18% year-over-year decline in revenue, a figure that stands in stark contrast to the high-growth narrative. This decline was primarily attributed to a reduction in volume from certain Army programs, highlighting a critical vulnerability: the company's heavy reliance on government contracts. While these contracts can be lucrative, they are also subject to the whims of government spending and can be notoriously inconsistent. This is not the diversified, rapidly expanding revenue stream that one would expect from a company with a multi-billion-dollar market capitalization. Furthermore, the company's profitability is a major concern. With an operating margin deep in negative territory, BigBear.ai is burning through cash at an alarming rate. This isn't just a minor hiccup, it's a fundamental challenge to the company's long-term viability. The market seems to be pricing in future growth that has yet to materialize, creating a valuation that is difficult to justify based on the current financial reality. The price-to-sales ratio is exceptionally high, suggesting that investors are paying a significant premium for a story that is not yet supported by the numbers. This is a crucial point for anyone considering a position in BBAI, whether through a Schwab Intelligent portfolio or a self-directed individual brokerage account. The recent stock movement, while impressive on the surface, is also a cause for concern. The high trading volume and significant price swings are indicative of a highly speculative stock, driven more by market sentiment and short-term trading than by long-term fundamentals. The stock's beta is over 3, indicating that it is significantly more volatile than the broader market. This level of volatility can be exhilarating for day traders, but it poses a significant risk for long-term investors. A stock that can surge nearly 7% in a single day can just as easily plummet on any negative news or shift in market sentiment. The recent drop of over 3% following a strategic partnership announcement is a perfect example of this investor uncertainty. While the partnership itself may have long-term benefits, the immediate market reaction was one of skepticism. This is a clear signal that the market is on edge and that any deviation from the bullish narrative will be met with swift and decisive selling pressure. Adding to this uncertainty is a class action lawsuit alleging false statements and potential accounting irregularities. This legal overhang introduces another layer of risk that cannot be ignored. The potential for financial restatements could further erode investor confidence and have a significant negative impact on the stock price. It's a reminder that even in the exciting world of AI, due diligence and a thorough understanding of the risks are paramount. So, what does BigBear.ai actually do? The company provides artificial intelligence and machine learning tools to both government and commercial clients. Their solutions are designed to help organizations make better decisions by analyzing vast amounts of data. This includes applications in predictive analytics, threat detection, and biometrics. The company's work with the Department of Defense and other intelligence agencies is a core part of its business. They aim to provide actionable insights that can enhance national security and operational efficiency. In the commercial sector, they're targeting industries like travel and logistics, with their VeriScan biometric system being a key product. The acquisition of Pangium was a strategic move to expand their presence in the commercial aviation space, a market with significant growth potential. However, the transition from a primarily government-focused contractor to a diversified commercial software provider is a challenging one. It requires a different sales and marketing approach, as well as a more scalable and user-friendly product. While the company has made some progress in this area, it remains to be seen whether they can successfully navigate this transition and achieve the level of commercial success that is currently being priced into the stock. The company's backlog, while substantial on paper, is another area that requires careful scrutiny. A large portion of this backlog is unfunded or unexercised, meaning it will only translate into actual revenue if customers decide to move forward with the projects. Given the recent reduction in demand from a key government customer, there is a real risk that a significant portion of this backlog may never be realized. This is a critical detail that is often overlooked in the excitement surrounding the company's growth prospects. Looking to the future, the outlook for BigBear.ai is a mixed bag of significant opportunities and substantial risks. On the one hand, the demand for AI and data analytics solutions is undeniable. The U.S. government continues to invest heavily in these technologies, and there's a clear legislative tailwind supporting increased spending on border security and defense technology. If BigBear.ai can successfully position itself to capture a larger share of this spending, the upside potential is significant. The company's strong balance sheet with a substantial cash position gives it the flexibility to invest in research and development and to pursue strategic acquisitions. This financial strength is a key asset that should not be overlooked. However, the risks are equally compelling. The company's reliance on a few large government contracts makes it vulnerable to shifts in government spending priorities. The recent revenue decline is a stark reminder of this risk. The company's inability to achieve profitability is another major concern. Until BigBear.ai can demonstrate a clear path to sustainable profitability, the stock will remain a highly speculative investment. The high valuation is another significant risk. If the company fails to deliver on the market's lofty expectations, the stock could be in for a sharp correction. The potential share dilution is also a concern, as the company has filed for the potential sale of new shares to raise additional capital. This could put downward pressure on the stock price and reduce the value of existing shareholders' investments. So, where does this leave investors? BigBear.ai is a company with a compelling story and a significant amount of potential. The AI sector is one of the most exciting areas of the market, and BigBear.ai is well-positioned to benefit from this long-term trend. However, the company is also facing some significant challenges. The recent financial performance has been disappointing, and the valuation is stretched. The stock is highly volatile and carries a significant amount of risk. For investors with a high tolerance for risk and a long-term investment horizon, BigBear.ai may be worth considering as a speculative position within a diversified portfolio. However, for more conservative investors, it may be prudent to wait for the company to demonstrate a more consistent track record of revenue growth and a clear path to profitability. The key question that every investor needs to ask themselves is whether the potential reward justifies the risk. Is the expectation of future growth strong enough to overlook the current reality of the company's financial performance? I'm curious to know your take. Comment below how many shares of BigBear.ai you currently hold and what your outlook is for the company. In conclusion, the story of BigBear.ai is a perfect illustration of the tension between market expectation and financial reality. The market is clearly excited about the company's potential in the AI space, and this excitement has driven the stock to impressive heights. However, the underlying fundamentals tell a more cautious tale. The company's recent financial performance has been weak, and the valuation is difficult to justify. The risks are significant, and the path to long-term success is far from certain. While the recent intraday surge is encouraging for short-term traders, long-term investors need to approach the stock with a healthy dose of skepticism. The reality is that BigBear.ai is a high-risk, high-reward investment. It is a company that could either deliver spectacular returns or suffer a significant decline. The future direction of the stock will depend on the company's ability to execute on its strategy, win new contracts, and most importantly, start delivering the kind of financial results that justify its current valuation. The expectation is high, but the reality is still very much in question.